This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports grew nearly 7% in April from the same month a year earlier, its first rise in 3 months. Although weakening fuel demand due to COVID-19 lockdowns has dampened throughput at Chinese refineries. The world's top crude oil buyer imported 43.03 million tons last month. Data from the General Administration of Customs showed on Monday, equivalent to 10.5 million barrels per day. That compares with 9.82 million barrels of oil per day in April 2021 and 10.06 million barrels of oil per day in March. Imports for January to April fell 4.8% versus the same period last year to 170.89 million tons, or about 10.4 million barrels of oil per day.
Japan will take time to phase out Russian oil imports after agreeing on a ban with other Group of 7, G7, nations to counter Moscow's invasion of Ukraine, Prime Minister Fumio Kishida said on Monday. The G7 nations committed to the move, in a timely and orderly fashion, at an online meeting on Sunday to put further pressure on President Vladimir Putin, although members such as resource-poor Japan depend heavily on Russian fuel. For a country heavily dependent on energy imports, it's a very difficult decision. But G7 coordination is most important at a time like now, Kishida told reporters, repeating comments he made at the G7 meeting.
Moving on to the top news in the energy sector.
Oil prices slipped on Monday alongside equities and weighed down by a strong dollar and demand concerns on the back of continued coronavirus lockdowns in China, the world top oil importer. Brent crude fell $1.83, or 1.6%, to $110.56 a barrel by 0953 GMT. U.S. West Texas Intermediate crude was at $107.70 a barrel, down $2.07, or 1.9%. Both contracts have gained over 40% so far this year. The dollar hitting a fresh 2-decade high made oil more expensive for holders of other currencies.
China's Iranian oil imports in April came off peak volumes seen in late 2021 and early 2022 as demand from independent refiners weakened after COVID-19 lockdowns pummeled fuel margins and on growing imports of lower-priced Russian oil. The easing of Iranian oil purchases, which still make up some 7% of imports by the world's largest crude importer, came as Western diplomats have largely lost hope in reviving a 2015 nuclear pact while high oil prices emboldened Iran to take its time to return to an agreement. A revived nuclear deal would allow Iran to boost its oil sales beyond China, Iran's number one customer for the past 2 years, to previous clients in South Korea and Europe. Next, we have the top news in metal markets. Britain announced on Sunday it will increase tariffs on platinum and palladium imports from Russia and Belarus in a new package of sanctions targeting £1.7 billion, $2.10 billion, of trade, which it said aimed to further weaken Russian President Vladimir Putin's war machine. Import tariffs on a range of products will be raised by 35 percentage points, Britain said, while it will also ban exports of goods such as chemicals, plastics, rubber and machinery to Russia, worth a combined £250 million, $310 million. The UK government will legislate for the new sanctions in due course, it said.
China's copper imports in April fell 4% from the same month a year earlier, customs data showed on Monday, as lockdowns across the country hurt manufacturing activity and consumption. The world's top metals consumer brought in 465,330 tons of unwrought copper and products last month, down from 484,890 tons in April 2021 and compared with 504,009 tons in the previous month, according to data from the General Administration of Customs. China's factory activity contracted for a second straight month in April, hitting the lowest level since February 2020 as widespread COVID-19 lockdowns halted industrial production and disrupted supply chains.
We will now look at the top news in the agricultural sector.
The World Bank on Monday approved a $150 million loan to help Lebanon fund wheat imports and keep bread prices stable for 9 months, the country's economy minister told Reuters. The program, known as the Lebanon Wheat Supply Emergency Response Project, still needs approval by the country's cabinet and parliament, said Amin Salam. A World Bank spokesperson said the loan aimed to finance immediate wheat imports to avoid the disruption in supply over the short term and help secure affordable bread for poor and vulnerable households, including refugees in Lebanon.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.